Well, top of the morning, Southern Oregon, and welcome back to the Real Estate Show. I'm Alice Lema. I'm a broker here in beautiful Southern Oregon with John L. Scott Real Estate. And today we have the good fortune of having Megan McPherson of Farmers Insurance in the studio. She's going to be talking about some of the fire mapping things that happened last year in 2023. We're going to talk about what's going on with that for 2024, some changes in the insurance industry because it is a new year, and also just some thought behind what goes on in rates and rate increases, as well as we're going to find out some other kinds of insurance. We're going to get a pretty good list. It's always a very educational conversation with Megan McPherson of Farmers. So we look forward to having her here in just a quick second. In the meantime, let's go over our local statistics for all three counties. And keeping in mind, this is normally a slow week, and we're going to do year over year residential, starting with Klamath County. The prices in Klamath County year over year are down 11% this week. The average single family residential home costing $356,778. The number of solds year over year in Klamath County were up a whopping 133% because they had 14 residential closings this week in Klamath County. The number of listings year over year in Klamath County were down 7%. There were 212 listings active on SOMLS this week. Josephine County prices year over year this week were down 15%. The average single family home in Josephine County costing $394, $844, almost $400 on average this week. The number of sold year over year was a whopping 800% because there were 18 closings in Josephine County in the residential market this week, quite a bit more than last year. The number of listings year over year this week in Josephine County were down 3%. There were 268 active listings on SOMLS in Josephine County this week. Jackson County prices this week were up year over year 45%. This is making the average single family residential home in Jackson County this week $686,298. The number of solds year over year in Jackson County were up 3%. We had 29 closings this week in the residential market. Listings in Jackson County were down only 1%. We had 593 active listings on SOMLS this week. So as you can see, this time last year compared to now is settling. We have quite a few numbers that are skewed only because we're seeing a lot more activity now than we did this time last year. It's still a great time to put your house on the market. If you're thinking about it, you could beat the spring rush. We still have a shortage of inventory in all three counties, and we still have plenty of buyers out there, and we're still selling plenty of property. So keep it in mind, and also check back in another week or so. We should have the year-end numbers for 2023 from SOMLS website. Looks like we've got Megan McPherson coming up. Well, Megan McPherson, thank you for joining us today at our new radio station home, the ACE. Welcome again.
Good morning. Thanks for having me.
So we have so much to talk about, and Farmers is my personal favorite for insurance, but you bring a breadth of education and experience for insurance in general. Could we maybe start with recapping a little bit about anything that happened in 2023?
Absolutely. So there were a handful of things that happened. The insurance industry and market as a whole right now is kind of a mess. Most of us have probably seen some sort of an increase on our premiums or some sort of even concerns from your home insurance carrier. There's a lot that's changed over the last couple of years. We've had a lot of natural disasters, even here locally. You know, we hear about them happening in other states, but they've really affected us here locally the last couple of years. you take inflation and some of the things that COVID kind of created, and the cost of rebuild, the time it takes to rebuild a home right now. There's a lot of factors that have forced insurance companies to make some pretty critical decisions. And unfortunately, that's where everybody here locally is usually seeing that on their premium. A handful of that being a lot of insurance policies and companies are looking more severely at where the home is located, if it's immediately in city or if it's out a little bit, looking at things like fire line score and protection class code that up until the last couple of years weren't terms that you heard very frequently, but now you
Right. Yeah.
hear them
Those, like,
pretty
what
often.
are those?
Yeah, but now you hear them pretty often because they're things that the insurance companies are looking at and considering when we're looking at rates. And that's, all the companies, not just farmers. So those have certainly those were the big pieces of 2023. Going forward this year, I'm being really honest with all of my clients and would love to do the same with all of your listeners, which is reality is I do not expect to see most insurance companies take big reductions right now. Farmers is becoming more rate stable. I know there are a lot of other companies that are kind of going through that process right now to figure out how much rate do we have to take to be rate stable to continue to pay out claims the way that our customers expect to have their claims paid out. And at what point can we start to kind of taper off the increases that most people have been seeing? And I think
Interesting.
and I think that 2024 will be a year where we start to see everybody kind of get in line. Insurance ebbs and flows. At one point, we're going to be more expensive than company A, and at some point, company A is going to be more expensive than us. And that's just kind of an industry norm. But the last couple of years have definitely changed what the ebbs and flows look like.
So that's interesting. I don't think people realize that it takes time for the industry to analyze what's going on with the payouts, but also to make decisions about adjusting. So the ebb and flow, I think, is going to be news to a lot of people.
Absolutely. I mean, every company is going to have to look at what they paid out in claims over the last year, over the last quarter, over the last month. And then that's where those adjustments have to be made. And in some areas, the adjustment isn't as severe as it is in other areas. Here locally, we had a lot of fires the year that we had Almeda and Obenchain, and we have so many community members and families and friends here in Southern Oregon that we all know personally who've lost something. That adds up to a lot in the end.
So you used a term, was it fire insurance code? What was it?
Fire line score.
Fire line. Okay, support. Okay. So let's talk about that. If because a lot of people want to be in Southern Oregon because of our outdoorsy and they want to be in the trees and all that. So how does that affect this?
So Fireline score is interesting and tricky. Fireline score is one of the things that gets pulled behind the scenes when an insurance carrier goes to run a quote for a new property. It's not something that we typically talk about during the buying or selling process. It's not usually something that really comes up short of when you're looking at trying to insure the property.
Okay.
And it is a rating that happens behind the scenes. So each company has their own different companies that they use in order to run kind of behind the scenes reports that help them determine, is this a property that we want to insure or not? Fireline score has been used for several years with most companies. It's just becoming a bigger part of the rating, a bigger part of the eligibility factor. Areas that have a lot of slopes and hills tend to get hit a little bit harder than areas that are maybe flat.
Oh, is that because it's harder to fight the fire?
Yeah, they
Okay.
figure that if you're at a steep peak, we could be 2 minutes from you and it's just going to travel faster. There are certainly things that homeowners and future buyers can do to eliminate risks on their property, but fire line score is one of those items that is pretty much determined for you. And depending on the company that you're going with, they really have the final say on if it's a score that they want to insure or not.
Interesting. So how does that differ from the state of Oregon fire map thing that they were doing? Are they kind of aligned or are they two different things? And where does it stand now with
So
Oregon?
two different things. Fireline score and the fire map that was presented last year are completely separate. So the map
Okay.
that was rolled out last year did get redacted that is not currently being used for anything.
Yay.
It is great news. As
Thank
far
you,
as I
whoever did that.
know, it is not something that they've really made a decision on how they're going to roll it back out again. Of course, there's discussion quite frequently that it is something that is still going to be pursued. But I know that there are several groups who are doing their best to give input to help it be rolled out differently when it happens in the future. At this time, that map is not affecting anyone's insurance scores. We were actually insurance companies are not allowed to use that map right now
Oh,
because
good.
it was redacted. So very separate from the fire line, but obviously a valid and legitimate concern for a lot of people who saw the map and saw how much was involved in it. But right now, it's not affecting anybody's premiums.
Okay. Any word on what process is going to be put in place to determine the next fire map, or are they still doing it behind the scenes? Because that was one of the big objections, is nobody got to weigh in on that. I don't think even the insurance people did.
Oh, no, no. I am not sure what the new process is. I've not been super involved with that part. And I do know several people who are trying to kind of keep their finger on it and figure out, are we able to have more say? I do feel like there probably will be more input accepted this time around, but I'm not sure what that process is yet.
Okay. Well, we are going to have to take a break and say thank you to our sponsors. We're chatting with Megan McPherson of Farmers Insurance, one of my favorite people. And we're going to be right back after a quick word from John L. Scott, Ashland, and Medford, the local Rogue Valley Association of Realtors, ARVAR, and Guy Giles Mutual Mortgage. We appreciate your support so we can bring you this show every week. We'll be right back with more Megan McPherson after a quick word. Don't go away. Well, welcome back, Southern Oregon. You're catching us with a great chat with Megan McPherson of Farmers Insurance. Thanks again for being on the show again, Megan.
Absolutely. Thanks for having me back.
So during the break, we were talking a little bit about the different kinds of insurance. Let's go back and cover that for our listeners so they know what we were talking about without them.
Absolutely. So a little behind the scenes. There are several types of insurance you can get on a property, and the type of insurance that you need depends on what you're doing with it. If you are buying it as your primary home and it's what you're going to be living in, you're going to need an owner occupied policy. If you are purchasing it as an investment property and you intend to rent it out to others, you're going to need a landlord policy. So depending on what your intended use of the property is will actually make a difference on what kind of insurance policy you need, and will make a difference on the coverages that you need, and all of those factors will apply in determining what kind of policy you need.
Well, and there's also some extra options for, let's see, if you're doing a home business, what does that look like? What kind of insurance do you need for that?
Absolutely. So if you are doing a home business, a lot of it will depend on what kind of a business do you have. Do you have something with pretty low foot traffic and you really just need to use a home office? And then most carriers can give you just a home-based business endorsement that you add into your policy to make sure that there's coverage for some of those business materials there. If you have more of a high foot traffic business that you're running out of your home, that's something that you'll want to talk with your agent about to make sure that it's actually eligible under your home policy and that they don't need to do something maybe a little bit different for your property. So insurance is very specific to what you're doing, who you're having at the home, who's living in the home. It's one of the big reasons why I feel so strongly that everybody should find an agency, an agent that they can build a relationship with. Whether it's me, whether it's the agent down the street, I think it's really important that everyone find an agency and an agent that they trust, that they can work with, that they can have conversations just like you and I are having right now, so that they are always being protected. As life changes, as their properties change, those needs are going to change. When you buy your first house, you may not need the best policy in the world, but as you start to add on some stuff and as you start to buy that wedding ring for that significant other, there's some endorsements and there's some coverages that you're going to need to add. And I really think that it's invaluable to have somebody that you can have those discussions with and know is looking out for your best interest.
Yep. And it really is helpful because your life is going to morph along the way. And we talk about that in real estate all the time. And I don't think we talk enough about it in the insurance relationship, because you are traveling with these clients through time as their life ebbs and flows. And one of the businesses that people, or there's actually two that they ask me about a lot when we're house hunting. One is the hairdresser, barber kind of person, and
Absolutely.
also the childcare person. And those both have a lot of foot traffic. Can we talk about those two businesses specifically just for a minute?
Absolutely. So, and this will very much depend on the company that you have your insurance with. So I will always preface this with saying, if you have a home-based business, make sure that you have talked with your agent thoroughly about it so that they know everything that is happening. They
Yeah,
can look,
don't keep anything secret.
don't keep anything secret. Make sure to talk with your agent and make sure that the company that you're with is okay with these different home-based businesses. Not all are.
Oh, that's interesting.
Barbers, beauticians, from a farmer's insurance standpoint, usually if you're doing it in a separate building, we can write a policy specifically to cover that. So
Oh,
there's
okay.
that's how we would handle it. Every company has different ways of handling it. And over the years, how a company handles that can even change. So again, that's kind of where I go back to it. I feel it's so important to have somebody that you have a relationship with, because they can tell you, hey, this has changed. We need to get you a new policy, or this isn't a big deal. We just add on that endorsement. When it comes to childcare, that gets a little bit trickier because you are taking care of people's small loved ones. That's usually gives a little bit of heartache to every insurance agent when you hear that there's a home-based childcare out of a house. Don't do it. But realistically,
Good to
people are going
know.
to do it. Talk with your insurance agent and find out what your options are before you have people's children into your home under
Okay. And
childcare.
it would that be a commercial policy, a residential policy, or kind of a
Depend,
hybrid?
it depends on the company. It really depends on the company. It's kind of a hybrid. You need to make sure that there's coverage for your home, the possessions in your home, but once you've got other people's children in your house and you're doing it for pay, it becomes a really big commercial risk. So
Hmm.
it's kind of a hybrid. You'll definitely want to talk with your insurance agent for that.
So I don't know if you're aware, but in the landlord tenant world, Oregon, not that long ago, made it illegal for landlords to deny home-based childcare businesses if they met a certain physical criteria. And so that's why it's kind of coming up more. And it's not just the tenants that want to do it, but it's people that own homes too. So it's a question I get asked a lot. And also the hair and beautician kind of
Yeah, yeah.
things.
The hair and beautician one isn't usually as big of a deal, especially if it's being done in another building.
Hmm.
And for that matter, childcare is sometimes an easier conversation if it's being done in a separate building where it's more,
Gotcha.
it's easier to see exactly what's in place for the children, what safety features are in place for the children. You know, when we take any one of our standard homes, if I keep a bathroom cleaner under my sink, okay, that's fine for me and my family. But if I've now got 5 children coming over that aren't mine, suddenly that's looked at as a really big hazard. So there's all those little details that we don't really think about until we have to, but that's the reasoning. Those are some of the thought lines when insurance companies look at childcare and kind of clam up.
Yeah. Well, and I think it would be helpful if people got a hold of you in the beginning of their thought process, not after they remodeled their house and,
Yes,
got a business license.
always. I always tell my clients that if you think you're going to start some new venture, I want to be the first to hear about it. Let's talk about what it is. Let's figure out what we need to put in place so that you don't get a surprise. You put all this time, you put all this money, and now we have to make some pretty drastic moves. Let's talk about it in the beginning so that you're prepared. You know what all the options are. You can make an informed decision. We can work through that together.
Hmm. Yeah. And that's why, again, going back to the lifetime relationship, so that this can be a person that you call when you have your ideas. Um,
Absolutely. And as life changes, when you
mhm.
buy that first house, it may just be you, maybe a significant other. 5 years from now, you may have some kids, and Now that you've got
And
a family
dogs and goats.
and dogs and goats, and now that you've got kids and dogs and goats to provide for, now we need to talk about some life insurance. Let's make sure that we're protecting them in that way. Let's make sure that we're still protecting
Oh,
everyone.
that's great. So is life insurance something farmers can help with?
Absolutely. Farmers is incredibly competitive with life insurance. I can't think of a single person who doesn't need it. I get plenty of people who say, well, I don't have a family yet. I don't have young kids. If something happens to you, someone is responsible for taking care of your estate. Someone is responsible for burying you or cremating you. Someone's responsible for taking care of your prior bills. Give whoever that person will be. Maybe it's a parent, maybe it's a friend, maybe it's a sibling, maybe it is a spouse. Give them some sort of money to work with. It doesn't have to be huge. It doesn't have to be super costly. There's policies for almost any sort of need. There are very few people who are truly 100% uninsurable. It may not be the cream of the crop policy. It may not be hundreds and hundreds of thousands, but most people qualify for some kind of policy that gives at least enough to get a burial, get a cremation, allow a little bit of time to take care of some needs.
Well, that's such a traumatic time. Even if you are in a situation where the person is going to be passing away, it's not much easier, quite frankly. And so if you're in a situation where you accidentally got older without getting life insurance because you were thinking about it, so what does that look like with farmers?
It's not as terrible as it sounds. I actually just in the last couple of weeks have helped several clients who got to that point in their life where, every year slipped and life insurance just wasn't top of the list. And every year that you're older, you will spend more on life insurance. So I always say, get it while you're young and healthy. Get it when you don't need it, because that's when it's the cheapest. Get it while you can. But if you're at that stage in life where maybe you haven't thought about it or it just kept going on the back burner, it's usually not the end of the world. There are policies out there to fit most needs, and it's not nearly as expensive as we think it is a lot of times.
Well, and not having life insurance, I think, is costly.
It is. It's much more costly than any of the premiums that you're paying.
Yeah. So, shout out to anybody who hasn't done that yet. This is the time of year where we're thinking about it. We just had all the holidays with our relatives.
Yep. Everybody's on the New Year's change. We're going to lose weight. We're going to start eating healthier. Get life insurance as part of that plan.
Or at least to make a plan so that everybody understands what you're doing. We're talking to Megan McPherson of Farmers Insurance. We do have to take a quick break and say thank you to Guy Giles of Mutual Mortgage, Rogue Valley Association of Realtors, RVAR, and John L. Scott, Ashland and Medford. Their sponsorship brings us this show every week. We'll be right back with more Megan McPherson. Well, hi, everybody. Welcome back to the Real Estate Show. Just a reminder that this show with Megan McPherson of Farmers is going to be repeated tomorrow at 8 a.m. So if you missed any part of this episode, you can catch it again. Lots and lots of great tips. Megan, let's talk about young people and life insurance. It's a catastrophic event when someone young dies. Not that it's not catastrophic when one of us dies too, but I think when young people pass, and if you're a young adult, let's talk about that first, and then go down the age bracket from there.
Absolutely. So I'm a mom myself. Let's just start there. I'm a mom myself. I've got 2 little kids. The importance of being a young adult who is responsible for kids, who is responsible for a mortgage. I have people who depend on me. Today, they depend on me because I pay the mortgage bill, I pay the light bill. If I'm gone tomorrow, they're going to depend on someone else to pay a different light bill, to pay a different mortgage bill. And whoever would be responsible for my kids is going to need money to be able to continue.
That's really true.
The way that I do.
That's really true.
We as parents play such a critical role in providing for our kids in a way that no one will ever be able to make up or replace us physically. But if anybody ever had to try to take our place or try to do that role, they would need financial help to do so. And I think that, for most healthy middle-aged people, you can get a decent life insurance policy for less than $5 a day, usually less than $1 a day.
Wow.
There's always going to be rating factors. Underwriting is always going to have those final decisions, but life insurance isn't near as important or isn't near as expensive as many people think. So I look at myself as a mom. I provide for my kids today by working and by everything else I do in our home. If I'm not there, somebody still has to pay those bills. Somebody has to be making those lunches. Somebody has to be able to be at home with them making those lunches, getting them to school. Parents are some of the most underpaid people we have, right? Because there's so many duties that moms and dads both play, and they are providing a monetary benefit to a family, whether you're a stay-at-home mom or whether you're a working mom, whether you're a stay-at-home dad or whether you're out working in the field. There are monetary things you bring to that family, and those would have to be replaced if something happened to you. The other side of that is I look at life insurance for kids. So I've got 2 little kids. I've got life insurance on both of my kids.
Do you?
I do, and I don't have it because I expect anything's going to happen to them early. Let's be honest. No parent wants to even think about something's going to happen to my baby while they're little. None of us want to hear that. I will never tell you, go get life insurance on your child because they might pass early. What I'm going to tell you is exactly why I have it on my kids, which is get them life insurance today while they are young, while they are healthy, while they are insurable. Because if you do it today and 5 years from now, they get an illness, they get diabetes, they have something come up that might make them either uninsurable or just a lot heavier rate when they get older, depending on the policy you've put them into, you've just given them the gift of insurability as long as somebody always pays their premium.
Wow. Yeah. I don't think
You've given
we
them
look at it that way.
Nope, you've given them a gift. So different companies will offer different kinds of life insurance for juveniles, children. I can only speak to the ones that I have to offer, and I don't want to get too far in the weeds with the specifics, but typically with children, you're not getting a policy because you want to think about what if something happens to them tomorrow. You are preparing them for their future. Their future spouse is going to thank you that they've already got life insurance.
So it's really a good financial planning move.
It is. It is.
Yeah. I don't think anybody looks at it that way. That's very interesting.
It really is. It is 100% why, as a mom myself, my kids have life insurance. And it's just one of those items that's put into our budget. Most things within our budget, you have your line item budget items, and then you have your splurge fun items. It hurts the first couple of times, but once you just make it part of your budget item, it just becomes one of those things that you pay every month. You set it up on automatic. It gets taken out because you're protecting your kids' future.
Well, and I think if you're younger as a parent, your career is still growing, your income is still growing. So it's very much like buying a house. That first couple of years, like you just said, it really hurts. But after a while, the automatic deduction and your income goes up. You just make allowances for it. So that's very interesting. Financial planning for your kids while they're young.
Absolutely. And most policies, there's kind of a base premium that you can pay. And then if you want to pay more, depending on the policy type, there's some advantages to it. You can grow some things. There's nothing wrong with starting out at a base premium. Take out some policies that you can afford today. And then when you get that raise, when you get that promotion, when you have that life change and you can start to afford more, then start paying some more. But get something today, even if it's small. The policy that you have today for yourself, the policy that you have today on your perfectly healthy young kiddo is better than nothing. Get something. Start small and just like our starter houses.
Yeah. So on the kids, when the kids become of age 18, 21, is that policy, does that go with them, or do they have to end it and start over with something else because they're an adult?
Yes, so it depends on the type of policy that they have. It will depend on the company that's underwritten. Farmers is pretty unique and incredible that we do have a policy we can issue for a juvenile, and as long as they continue paying the premiums, they can keep that through their adulthood. So
wow.
if I get my son a policy today and he has some crazy illness come up 2, 3, 4 years from now, as long as his premiums keep getting paid, when he's 20, 25, 30, as long as premiums are paid, he's still got life insurance, even if he can't get a new policy or a reasonably priced policy.
Wow. Wow.
Dependent on the company and the policy, but most juvenile policies that are a true standalone policy for that child, they're usually something that they can take with them as adults.
Interesting. Interesting. So since we're on the topic of life insurance,
Yeah.
what is the difference between whole life insurance and term? Because
Absolutely.
that's something that comes up a lot.
Yeah, no, that's a great question. So I look at term life insurance as renting, and I look at whole life insurance as buying. So just
Okay.
like you rent a house or you buy a house. So term life insurance, you're going to pay less premium and you're going to get more death benefit. Death benefit is how much ever the policy would pay out if you die within 20 years. So for example, a 20-year, $150,000 term policy, $150,000 is that death benefit. You're usually going to pay less for a term policy. You're going to get more death benefit. The reason is the company is rating based upon the odds that you will outlive that 10, 20, 30-year term. So it's
Mhm.
just like renting. You pay in premiums for those 20 years. If you die within those 20 years, your beneficiary is going to get that 150,000 or how much ever you have it for. If you outlive those 20 years, then you've paid premiums for 20 years and you never see anything from it. Now, there are some policies where you can get return of premium and things like that. There are companies that offer that, but we're not going to get too far into the weeds on it. But true term life insurance, you rent it, you never see anything from it. A whole life policy, it's that permanent policy. It's like buying a house. You own the life insurance policy. You are typically going to pay a little bit more for it because the company is almost guaranteed they will eventually pay out that death amount as long as you continue paying your premiums. But you've got a policy that as long as you continue paying your premiums, you have a policy forever. You take a term policy at the end of 20 years, even if you're on a policy where you get a return of premium or you get something back if you outlive the policy, you have to reapply for a new policy. You're now 20
Oh,
years
as an
older
older person?
as an older person and potentially with medical issues, potentially with a medical history. So you're now starting over just like any other brand new policy. So there's advantages to both kinds. A lot of times with my homeowners, and I'll take myself as an example, a lot of times we'll do a term policy and a whole life policy.
Oh, really?
Absolutely, you can double up because that gives you a larger amount of life insurance. But it's kind of like putting eggs in two separate baskets. So you've got a couple 100,000 in a term life insurance policy. And in theory, as your mortgage starts to go down 10, 20, 30 years from now, you may not need as much life insurance as you do the day you first take out that mortgage. And then your whole life policy is that policy that you keep forever. So the term policy you'll eventually get rid of potentially, and then you've still got a policy. So a lot of times I'll do that with my clients because it's more cost effective that way for a lot of people, especially when you're starting out, when you've just taken out that mortgage. It can look pretty daunting to look at a $500,000 whole life policy with a brand new mortgage, but it's not near as daunting to look at maybe a $50,000 or $100,000 whole life policy, and then we do a $300 or $400 term policy. Suddenly, that premium's pretty manageable, and you're covered for what you would need if something happened today.
I did not know that you could mix them. That's really interesting. It's
Absolutely.
an insurance cocktail,
Absolutely.
non-alcoholic, of course.
Non-alcoholic. In a version.
Yes, yes. Well, we've got lots more to talk about with Megan McPherson of Farmers Insurance. But once again, we're going to take a break and say thanks to our sponsors. And just a reminder, this episode will be aired again tomorrow, Sunday at 8 a.m. on our new radio home, the ACE AM 1300. We'll be right back with more Megan McPherson from Farmers. Don't go away. Well, welcome back again to the Real Estate Show, folks. I'm Alice Lema. I am a broker here in beautiful Southern Oregon with John L. Scott Real Estate. And I have the privilege and honor of getting to chat with Megan McPherson of Farmers Insurance again. Thank you, Megan.
Thanks for having me back. I appreciate it.
So we're learning so much, as always. And one of the things we were talking about in the last segment was life insurance, and that you could blend term and whole life insurance. That was super interesting. But that brings up the question of if you have big mortgages or even just any mortgage, or you're an investor, and you have lots of mortgages, is there such a thing as personal mortgage insurance, or how do you handle that?
So there is oftentimes referred to as mortgage protection insurance. Mortgage protection insurance is really a life insurance policy. There are certain ways it can be added onto your loan, and it's usually a group life insurance policy. So it may be
Interesting.
pretty inexpensive. It may be an option that your lender will share with you, and it's not necessarily a bad thing. What I will say about mortgage protection insurance is that it is not a life insurance policy that you own. So if you pay off that loan, or if something changes and you end up selling the house, you don't have that anymore, you just lost that life insurance. So it's not a
Oh,
policy
okay.
that you own. It's not something that goes with you. Because of that, I think it's great if you want to look into it, but I would always say go get a true life insurance quote, see what the actual cost difference is. And I'm always going to lean towards get a life insurance policy that you own, get a policy that stays with you regardless of where you're living or what property you have. Kind of the same as I look at it if you have life insurance through work. I think it is incredible when
Uh-huh.
employers are able to provide life insurance to their employees. I think it's one of the greatest gifts an employer can give an employee. And if you're with a company that does offer life insurance, I think that says a lot about the company right off the bat. The con, the negative on having a life insurance policy through work is that it usually is also a group life insurance policy. So if you leave the company, if you retire, if you part ways, you typically don't get to keep that life insurance policy. Every now and again, that may not be the case if they're true life insurance policies. You'll definitely want to look into whatever your life insurance policy is and what your employee benefits are. But typically, if your policy is through an employer, you lose that policy if you leave that job or something happens.
So that's the question to ask, because it sounds like the difference is in these more personal insurance policies, they're tied to something else, not you. Like the personal mortgage insurance you said was tied to the address of the building of
It's tied to
the,
your loan. It's
if it's
tied to
to
your
your
loan.
loan. Well, I didn't even
Yeah.
know that they could do that through your loan.
Yeah, I know that it can be done on car loans as well. I've seen that where
Oh,
some
that's interesting.
added in. It's that group life again though. So if something
Uh-huh.
changes, you
Yeah, but
don't
something to look
necessarily.
into. Just, yeah, more options.
Yeah,
And then one of my personal favorites is the umbrella policy. And a lot of people don't even know what I'm talking about. But I bring this up when we're dealing with investors and
absolutely.
people who have their own businesses. Can you talk a little bit about what an umbrella policy is and what it covers?
Absolutely. It's one of my favorite policies. So, an umbrella policy is just plain and simple. It's an additional liability policy. So, you've got your auto insurance liability, you've got your home insurance liability. If you've got some rental properties, you've got liability coverage on those buildings, those homes themselves. An umbrella is simply an additional liability limit. They come in $1 million increments. So, 1 million, 2 million, 3 million, 4 million, 5 million, etc. I'm going to use 1 million just for our conversation purposes, but there are certainly different options. Where it comes into play is if you do have that rental property and something happens that causes harm or injury to your tenants. So something goes wrong with the heat system, it causes a fire in the house, something happens to one of their relatives in the home, something happens to one of their pets in the home, something happens to their property, and it can be proven that you, as the owner, somehow are held responsible, held liable for that claim. If it goes beyond whatever the liability limit is you have on that property, they're now coming after you for the remainder. If you have an umbrella policy, you now have a whole nother layer of protection. You now have a whole nother policy that can come in to investigate, defend, potentially pay out on your behalf if it's a coverable loss. They are
So does
invaluable.
does the umbrella policy follow the person or the property?
It's going to follow the person. So I'm going
Okay.
to use you as an example. Let's pretend you own a car, you own a house, you own one rental property. You get an umbrella policy. And there are some caveats dependent on the ownership of the homes, the ownership of the rental property. If you have one in an LLC and one is owned individually, that can make some differences. Again, I go
Oh,
back
okay.
to find a local agent who can help work through those with you
Uh-huh.
to make sure that you are truly being best protected. But for simple cases, we're going to pretend that everything you own is in your personal name, and you've got an auto, a home, and a rental property. Your $1 million or $2 million umbrella policy could go over any one of those items. If you get into a really bad car accident, you could have an additional 1 million. If something really bad happens at your house and someone gets injured, you could have an additional 1 million. If something happens at your rental, you could have that 1 million. The term umbrella, they truly do cover over everything that you own and insure, provided it's listed. And there's a lot of making sure that everything is listed and that your agent knows what you have. But that umbrella really does come in and cover over all of the different areas: your autos, your homes, your landlord properties.
So, regular homeowners, in my opinion, and not to be derogatory about teenagers, but during teenage years, we do have things happen. They're denting cars. They might be out late when they're not supposed to, stuff happens. And so, and the idea of people who have really big trees in their yard and it falls on somebody's house are these items where an umbrella policy might come in handy just for a regular homeowner?
Oh, they certainly can. So I have just a going phrase that I use here in my agency, which is you don't have to be a millionaire to be sued like you're a millionaire.
Oh,
You
wow.
have to have money in the bank. It's so true. You don't have to have money in the bank for somebody to sue you for money. Oregon has specific laws where if you are found liable and there is a large enough lawsuit, you can have your wages garnished. You have to be left with a home, but not necessarily the home that you're living in at the time of the loss. So I really think that anyone who owns a home, whether you own a rental, whether it's a nice home in your ideas, whether you have much of a retirement set aside, if you own a home, you have an asset that can be taken from you. Umbrella policies are on average $200 to $300 a year. Most
That
attorneys,
is so cheap.
it's so cheap. It's so cheap. And if it's more than that, you've probably got more exposures, more properties, more rentals, which makes it that much more important. But for a standard homeowner, 200-300 on average. On average, most attorneys are 150 to 200 an hour.
Yeah, there you go. That's a good way of looking at it. One phone call to the attorney is a year's worth of umbrella.
Yeah, it's really pretty inexpensive for what it can cover, and you do not have to be a millionaire to be sued like a millionaire.
Wow. Wow. Very poignant, Megan. Very, very poignant. So small business owners, if you have a job that's particularly either like you're dealing with the public or you're driving, are those kinds of opportunities where umbrella could come in handy as well?
Absolutely. You can get personal umbrellas and you can get commercial umbrellas.
Oh,
Yep, absolutely. And commercial limits, you tend to automatically do higher limits on a commercial policy
yeah.
than you may automatically do on a personal policy.
Yeah.
You can get an umbrella on both the commercial side and a personal side. And depending on the line of work that you're in, it can be really advantageous and worth that additional premium to have that additional coverage.
And just as a sideline, folks, I'd like to personally recommend the drone pilots out there get an umbrella policy.
Yes. Yes.
We'll leave out the details.
Yep.
It's not becoming a hazardous job.
There's a lot out there that I think, we do on a weekly basis that doesn't seem that big of a deal, but it can sure go south.
Yeah. So I just have one last question about the umbrella. If you're a homeowner and your house is, or something about your house is damaging your neighbor's house, let's say, your tree roots are growing into somebody's sewer, or that the giant tree in your yard is going to fall down and then it falls down. Are those places where an umbrella policy might help, or is for the knowledge ahead of time canceling it out? How does that work? And we only have like 30 seconds. Sorry.
You're going to run into some problems if you know that you have things getting ready to cause damages. So do your due diligence, do your part to take care of known issues. let the insurance be there to cover the issues that are unexpected.
Gotcha. Okay. Well, Megan McPherson Farmers, will you please come back again? And
I would love to.
I have still a list of questions. So real quick in 10 seconds, what's your phone number?
541-776-0673.
Well, Megan McPherson, Farmers Insurance, thank you. Such a delight. Learned a ton. And again, the show will be aired tomorrow at 8 a.m. Have a beautiful Southern Oregon weekend. Bye now.
Bye.